Okay, today I'll be talking about what will happen if another stimulus bill isn't passed. So, this is what I think will happen if it isn't passed by the end of this year. Um, you will probably see more evictions and foreclosures because having just a moratorium simply isn't enough. So, a moratorium is where you can get the tenant to stop paying their rent. They don't have to pay their rent, and they could stay there for a set period of, for a set amount of time. For they could stay there until, let's say, from September now to the end of this year. Let's say that's about roughly 3 months, right? So they're not paying, they don't have to pay rent, but at the end of the moratorium, they have to come up with all the money to pay the rent. And I don't think they're going to be able to pay 3 or 6 months worth of back rent at one time. So if they don't pay it after that period, then the tenant will just get evicted. Okay, in the meanwhile, um, the landlord, a lot of landlords who have tenants have mortgages. I'm not saying all of them have mortgages, but a lot of them do have mortgages, which they have to pay the bank. And if they don't pay it, then their property will be foreclosed on. If they don't come up with the money to pay their monthly mortgage for the property, then it just gets foreclosed. That's it, by the bank. So evictions and foreclosures. So a lot of people have become jobless during this COVID-19 crisis, right? Because of all the shutdowns. So a lot of people are unemployed, so they may not be able to pay their mortgage or rent. And this will eventually just lead to more homelessness and more defaults on loans because people can't pay their mortgages back. Landlord or homeowners or whatever, or people who own commercial real estate, if they can't pay it back, then they have to just default on their loans, right? Their properties just simply get foreclosed on, and that will lead to a banking crisis. And you also see a sharp spike in bankruptcies because you're seeing a lot more joblessness and business bankruptcies, right? Due to the lockdowns. Like big companies like Boeing are laying off thousands of people, and other companies as well. They're laying off thousands of people as well. And you see all these malls across the country that are empty, and there's hardly any stores in it. And that has been an ongoing problem for years, I guess. Maybe 5 years, 8 years, or something like that. It's been a problem, and more bankruptcies. I mean, the spike in bankruptcies leads to more loan defaults as well, and that also leads to more. That leads to a banking crisis again, and more jobless people can't pay back their debts. They may have credit card debts, they may have car loans, and stuff like that. Student loan debts, they can't pay that back. And all of that leads to a financial or banking crisis. And that also leads to having more people who are jobless, leads to more civil unrest. And that also leads to more crime as well, because if people don't have money, then I guess some of these people will resort to crime to make a living or something. and there'd be also more domestic abuse in households, right? And as for the banking crisis thing, it leads to another thing. It leads to an equities market crash, a stock market crash, and it leads to price of real estate to crash because you have all these people who aren't able to pay back their mortgages, right? Whether that be commercial real estate or residential, they can't pay it back, so that leads to a crash in real estate prices, right? And it also leads to a crash in most asset classes, like when you have equities market crash, um, people will a lot of there are a lot number of people who buy stocks on margin. So what a margin is you're borrowing money to buy stocks. So then if you buy stocks on margin, then you have to pay this money back, right? If the price of stocks don't keep going up, then you have to pay this back. And they have to sell other assets in order to pay it back. So they may have like precious metals, or they may have real estate, and they could sell those assets to cover for the margins, right? Because they bought stock or equities with debt, so that would cause other assets to crash. And I mean, people are saying gold is going to go up to $1 million or something, or $100,000 or 50,000. But when a when you have a banking crisis, that usually doesn't happen. Um, all assets crash simultaneously. Usually, that's what happened in 2008 and 2009. All assets crashed because even the price of gold did crash, and precious metals did crash a lot. Because at one time, palladium around 2008 was as much as $2,000 an ounce, and it crashed to, I think it's maybe $1,200 in 2009, and gold crashed to like $600 or something like that. And silver crashed to like, I think, $9 or $10, and real estate prices crashed as well. So everything just crashed because when the equities markets crash, usually everything crashes with it. And people who made malinvestments, in the equities market and other markets, speculative markets like cryptocurrencies or precious metals or whatever, they they will probably have a more difficult time raising capital. So, or if they bought stocks on margins, they may even go bankrupt, right? If the price of equities falls a lot, then you will see a significant amount of small investors go bankrupt. So, and this also leads to less investment money, right? After the equities market crashes and you have a banking crisis, there's less people don't want to invest more money into the economy, so that's less investment money, and liquidity dries up as well because after a banking crisis, you have banks don't want to lend out money to consumers, right? And you're seeing this right now. The liquidity in debt is drying up, whether that be mortgages, car loans, credit card debts, and stuff like that. That's drying up right now. So they don't want to lend out more money. Banks don't want to do that because they're getting more people who are going into bankruptcy and stuff, and they need to cover that instead of trying to invest give more money out in the form of loans and stuff like that. So this also leads to another banking crisis. So when too many of the loans are becoming delinquent and banks don't have the money to cover it, either they have to go to the government and ask for a bailout like they did in 2008, and which they did because they needed to do that, because if they don't bail out the banks, then you have something called bail-ins, which means the banks will use depositors' money to cover their losses. So then that becomes a serious problem, because let's say you have $30,000 in the bank or something, or you may have like $500,000 or whatever in the bank, right? And you need that money to pay your bills, right, to survive, right, in a monthly basis, because we all have to pay utility bills, right? We have other bills we have to pay, like for our cell phones or internet, and we have to pay property tax if you own property, and we have to pay, and some of us may have car loans and stuff like that, and mortgages we have to pay, and this is all paid through the banking system. And if the bank doesn't only allows you to spend, like, let's say $1,000 a month, that's a problem, right? Because if you spend more than that, then you can't pay your debts off. So if they start using depositors' money, that leads to a real problem. So, and if they don't get bailed out, then you have serious problems. And you could kind of like see problems like that, which happened in like countries like Argentina, where you had an economic collapse, and you had people couldn't get their money out of the bank. They could only get like a certain amount of money, let's say like $300 a month or something. I don't know if that's the exact amount, but they limit how much you can take out of the bank. That's not good. So that all leads to an economic collapse. So then if the banks fail, then obviously you can't do business, right? Because all the financial transactions that you make is through a bank. So that's pretty much what would happen. And as for this part right here, more civil unrest, back around 2010 and 2011, you saw stuff like Occupy Wall Street. But after we had the 2008 stock market crash, and the real estate crash as well, the subprime loan crash, you had a lot of like people being foreclosed on, people going bankrupt and stuff like that, and a lot of people were protesting, with that Occupy Wall Street thing, and it was kind of violent. And right now we're seeing more stuff like these protests, which are turning violent as well. I guess when people don't have anything to do, you're gonna see more people going to the protests and trying to find a reason to do something. This is inevitable, right? Because if you're gainfully employed and doing stuff, you really aren't going to be doing stuff like that, I don't think. And there's going to be more crime as well, like petty crimes and stuff like that, like people breaking into like homes, people breaking into like cars, and maybe like stuff like home invasions, burglaries, and stuff like that. And of course, when people become jobless and can't make a living, you're gonna see more drug abuse and alcohol abuse, and this will lead to domestic abuse. So these are the things that will happen if they don't come out with a stimulus package, um, probably by the end of this year. And the first stimulus package that they passed for this COVID-19 simply wasn't enough. I don't think $1,200 as a one-time payment is enough to justify locking down the economy for like 3 months. They should have given them at least, maybe I would say $1,000, $800 to $1,000 a month for people who made like less than maybe $45,000 a year. They should have given them at least that much, you know. And this shouldn't just have been for people who filed taxes. It should have been kind of like a universal thing. You know, people should have been able to get this money regardless. And if they did that, I'm pretty sure they wouldn't have, certain states wouldn't have ended the lockdown earlier, you know, because obviously people have a lot of um, things they have to pay every month, right? And you can't just lock down the economy like that without giving people an incentive to do so, right? So obviously this whole thing wasn't done right, in my opinion. They should have given them the money, and then they should have implemented it. That would have been the right thing to do, but that's not what they did, right? Because the federal government didn't take control of it. They just let the states mandate everything, and obviously governors and states really don't have that much power. I mean, not like the federal government. The federal government could, they can print money, right? They can borrow money from the Federal Reserve, and the Federal Reserve prints it, and of course it leads to more debt, but that doesn't really matter because the money is, the debts are just inflated away with time. So they should have just given them the money first, you know, and then they could have like mandated a national lockdown. But without the means to do so, it's creates a lot of hardships for people. So if something isn't done soon, it's just going to lead to something like an economic collapse. And as for the economic collapse thing, I really don't think it's going to be an economic collapse where it's going to be like Mad Max. But you're going to see a lot of people who become homeless and live in the streets. And of course, crime rates are going to go up. You know, so you got to be very careful when you go out and stuff like that, and be very careful where you park your car and everything, you know. And just be more vigilant. And I'm seeing a lot of homeless people right now, you know, as these months have gone by, you know, more and more actually. So pretty much, yeah, they're gonna have to do something about it. Okay, thanks for watching by Ace 1000 KS 1975.